NVIDIA is too small to care about the AI industry. So, what if I told you that most of the money is currently made in customer support and that the biggest growth is expected in computer vision? In the next 10 minutes, we'll cover the landscape of the AI market, and I'll give you 3 hot picks to invest in. NVIDIA will make roughly $40 billion on AI chips and servers in the next 12 months, which is around 10% of the global AI market. Digital Systems made $120 billion, while autonomous robots, including self-driving cars, a little over $100 billion. Now, the structure of the market will balance itself in the next 3 to 4 years. Now we have the biggest segments of infrastructure, core technologies and software, enterprise solutions, and disruptive industry companies. Now, before we cover all of these and give you 3 stocks to consider, please subscribe to our channel. Next week, we're going to talk about a template of how to properly analyze a stock. We'll use Tesla as an example, and you'll get a free checklist as well, so stay tuned. The infrastructure segment consists of hardware solutions like chips and servers. Now, the biggest player on the chips market is NVIDIA with a $40 billion revenue, while the biggest cloud and data center providers are Amazon, Google, and Microsoft with a combined cloud revenue of $124 billion. Now, this segment is expected to grow by 100% in the next 6 years, which is nothing compared to the whole AI market. Just look at the numbers. Infrastructure will grow 2 times, while the industry will become 8 times bigger. Now, the compound annual growth rates are 10% and 36% respectively. Quite a difference, isn't it? Now it's time to move on to the next segment. And remember, there will be 3 tickers to buy in the final part of the video. Now, the core technologies are the interesting ones. The fragmentation is insane. Now, while there's a lot of hype around solutions like ChatGPT, these guys usually make money through software. Now, most of the tech frameworks are developed by major companies like Google and Microsoft, but they make money as part of the software solutions. And most of the independent companies are acquired at early stages. The competition here will define which framework will become the most popular and therefore which platforms will benefit the most. So for now, we can see that the most popular stack is one of the following. We won't go too deeply into technology itself here. Our goal is just an overview. Data science is an essential process. People underestimate how much effort it takes to actually ingest and process the data before it can be analyzed. Getting the correct and full sources, consistently checking the incoming flow for errors, doubles, missing readings is a lot of hard work. So like here at Visual Sectors, we've spent a lot of time this year to normalize the data we get from vendors. Only after having finished this processing bit can you go and do the interesting stuff. And that's what data science is about. Solutions here aim to provide support and automate the work of data scientists. It's a narrow segment. No big names have emerged here. Machine learning is probably more familiar to a broad audience. It's a set of analytical algorithms helping process large data sets. Now, the segment has 3 main branches: machine learning itself, deep learning, and neural networks. But the trick is they are actually subfields of one another. The difference is in the amount of human intervention. Google is one of the market leaders here. Natural language processing is another interesting segment. It helps software understand human language, text and spoken words, translate and recognize sentiment. Take earnings calls, for instance. Standard & Poor's recently acquired a company that specializes in immediate sentiment analysis during the call and feeds this data into trading bots. We have no chance of reacting ahead of trading bots. And one of the most hyped solutions here is ChatGPT, recently acquired by Microsoft. Now, the biggest players here are Google, IBM, and Amazon. Their tech stack is mostly feeding their platforms, and they acquire anything interesting that emerges to create monopolies. Do you remember how quickly Microsoft took ChatGPT off the open market? So that's where we move to software solutions. Most of the use cases can be grouped into consumer interactions or intelligence. You see, to sell a business, you can only promise one of 2 things. You can either help them get more revenue or reduce their expenses. The solutions helping to optimize processes, including data processing, customer support, security, and recruitment. Can you imagine the global market for call centers is $460 billion, and the expected AI replacements will reach $58 billion, which is only 12% of the current cost? But for investment purposes, it will be more beneficial to look for the companies that'll save the $400 billion rather than try to get the share of those who earn $58 billion. The biggest employment in the customer support area is of financial services. Citibank alone has 150,000 client managers earning around $6 billion. Optimizing that army will increase the profit by at least 50%. Solutions for increasing marketing output are a little more common. CRMs are well known and have been used for decades now, Salesforce being the star of the market. Now, on the enterprise level, we have Oracle, SAP, and Microsoft covering all processes throughout the business cycle. It looks like Microsoft is everywhere. Now, of course, there are some new tools. Companies like Collective Eye create models that predict buying patterns and enhance the marketing and sales funnels of retail businesses. Now, the last element of the big AI puzzle are the industry-specific disruptive companies. There are quite a few in agriculture, education, investment, legal services, logistics, and retail finance. Most of them are startups, and we shouldn't focus on them too much, but the investment industry solutions are interesting. Now, I've already mentioned how Standard & Poor's uses natural language to read the sentiment of earnings calls, but the biggest AI players are the other guys. Bloomberg is a company famous for its analytical research and market data. No wonder they're leading the AI transition, but they're a private company, and so are Standard & Poor's. Of course, there is also the trading bot segment. Now, it's time to meet Jim Simmons of Renaissance Technology. He's been developing algorithms for 40 years and is considered to be one of the most successful hedge fund managers of all time. The Medallion Fund manages $10 billion, and that's the biggest they can be because of the quantity of trades required to build correct predictive models. That gives us all little hope that on a $50 trillion market, there's still enough space for simple guys like ourselves. So let's see what we can do with all of this information and which investment is a good opportunity. We've seen that infrastructure is not really the growing segment. 10% expected annual growth rate is not really inspiring. Now, the core technologies are wiped clean by the big guys like Google, Microsoft, and Amazon before they can become public and investable. Industry disruptors are also quite small, yet most of them are private companies even when they've already established. So that leaves us with three options, really. First, we can go for the platforms building AI ecosystems. Now here, both Microsoft and Google are the best options. I like how versatile they are. The business has a healthy proportion of infrastructure, technology frameworks, and services. That's the mistake of Amazon. For example, they try to open their cloud solution to all types of frameworks, but as we see, independent solutions simply don't survive. If you look at long-term option bets, you can see that traders expect Google to reach $165 per share in the next 18 months. A 20% upside, not bad at all. Microsoft looks pretty similar, a $400 target by January of 2025 and a 20% upside, but Microsoft is more resilient against recessions, so I'd stick with that one. Now, the second option is enterprise-level solutions. AI is the next big investment cycle for corporate clients, and they are likely to stay within their current ERP ecosystem. Oracle is the obvious one here. Options bets for next July show a 30% upside. The stock looks likely to reach $155. Now, the third option is trying to figure out businesses that will cut the most cost by implementing AI. These are businesses with the biggest employment. Now, we've already talked about Citibank. Besides having a capacity to increase profits by replacing support and client managers, they are currently trading at 40% of their price-to-equity ratio and pay 5% dividends. It's at the downside targets, yet the upside is at least 30% in the next 6 to 9 months. Just look at these January accumulations. Please visit the links in the description to play around with the options data. Visual sectors is the perfect answer to the win question. We help retail investors understand key trends in the market, and our data sets put a calendar date on them. We source the most complicated data from Standard & Poor's, FactSet, and Options Pricing Reporting Authority to turn them into easy-to-read charts with up to 72% win rate based on 10-year back test.